Thank you, Chairman Green, for holding this hearing and for your continuing work to promote equality in financial services. I welcome our witnesses. I thank you all for being here. I think we can all agree that discrimination based on race, gender, or sexual orientation, or any other immutable characteristic is wrong and should not be tolerated anywhere, including in the mortgage and consumer lending industries. Unfortunately, despite federal and state laws prohibiting discrimination on those bases in financial services, some evidence suggests that LGBTQ citizens may still face disparate treatment in housing and consumer lending. Unfortunately, lenders' access to and reliance on data that is not demonstrable of creditworthiness, such as gender or race, may lead to subjective judgments that discriminate against certain populations. Lenders and landlords should rely more heavily on risk-based metrics for evaluating creditworthiness that are blind to demographics or immutable characteristics. Data-driven decisions could prevent discrimination or judgments that may be clouded by unintended biases, or intended biases for that matter. Credit reports do not utilize data on gender, sex at birth, sexual orientation, or race. They rely solely on metrics that reflect a borrower's credit history and ability to repay, such as a number of open lines of credit, balances due, payment history, and whether the borrower has filed for bankruptcy. Reliance on these metrics without consideration of race, color, religion, or sexual orientation can promote equality in financial services and guard against deliberate or unintended biases. Some of our witnesses today relied on data provided by lenders under the Home Mortgage Disclosure Act, or HMDA, for their research. Among other things, HMDA requires lenders to collect and report gender data on their borrowers. While this may be useful information, it has the potential to allow for biased underwriting. We need to ask ourselves, are data provided pursuant to HMDA doing more harm than good? Are there more effective ways to collect necessary information that could offset unintended biases? This is a conversation that I very much look forward to having with the chairman and other members of the committee as we work to close the gap of financial services in underserved populations. Research indicates that LGBTQ Americans utilize basic financial services, such as bank accounts and retirement plans, at a lower rate than the non-LGBTQ population. It should be a goal of this committee to expand access to financial products and services to all corners of the population, regardless of race, gender, sexual orientation, or whether they live in an urban or rural community. Expanding financial inclusion initiatives and improving financial literacy are critical to closing the gaps for and underbanked citizens in our country. In an age of economic prosperity, we should work to ensure that all citizens feel the benefits. And data-driven decision-making based on financial technology and innovation driven through free enterprise is very likely the best antidote to discrimination. Once again, I thank Chairman Green for holding this important hearing, and I thank the witnesses for being here today, and I'll yield the remainder of my time to the ranking member.
Well,